Hello and welcome. My name is Lewis McClellan, and I'm the editor of the Digital Monetary Institute here at OMFIF. And I'm delighted to welcome you all today to our panel launching our new report, Unlocking Opportunities Through Better Public Finance Management. Over the past 18 months, OMFIF has been working in collaboration with EY on this project, exploring the benefits of incorporating blockchain to solve some of the problems of public finance management. The central hypothesis of the project was that public finance management could be made more efficient, transparent, effective, if there were a simple means of connecting a particular unit of currency with its intended purpose and the impact it has. In effect, integrating the financial and non-financial reporting structures of public budgeting. In order to explore that hypothesis, we conducted a series of roundtables and podcasts with experts from a range of fields: debt management, investment banking, development finance, charity grant management, and more. And we examined their experiences of the challenges that they face in overseeing their own budgetary disbursements and what they felt that the benefits of improving those systems might deliver. The results, in many respects, were quite profound. I think I'll summarize them in a few points here. First, existing PFM public finance management systems are in many cases quite fragmented. The intermediaries between the central budgetary authority and the delivery agents that spend the money that's dispersed, they have their own accounting systems. These often require manual reconciliation. There's duplication of effort, introduction of additional risk factors, and a lot of challenges that come from that. Secondly, there's a very widespread trend where budgetary authorities are expected to capture increasingly granular, precise, and timely data on how the funds that they disperse are being used and what the impact that they have is. You can see this in green ESG finance markets, the grant application process, international aid, etc. Certainly, the NGEU COVID recovery project is something where there's extremely high standards expected of how the money is going to be used. In many cases, donors or lenders can only deliver funds if they're confident that there's a sufficiently robust governance structure in place to ensure that they'll get high quality impact data. And complying with this kind of rising standard, particularly given the disparate nature of the systems involved that I mentioned earlier, it can be quite onerous, quite resource intensive, and yeah, a big challenge for public finance, budgetary authorities. And then thirdly, beyond the operational efficiency savings that come with a system that facilitates the seamless flow of financial and non-financial data between budgetary authorities and delivery agents, beyond those efficiency savings, there's also allocative efficiencies. If you improve the central budgetary authorities' understanding of the impact of the funds that they're spending, then they are able to make better decisions about how to use those funds in the future. And there's some very powerful redistributing that money more effectively in some there's some concrete examples we describe in the report of ways that can be done, can have a very powerful impact on public finance management. So you can find details of what I'm talking about published in the report that we're launching today, unlocking opportunities through better public finance management, and in the report we published a little over a year ago, blockchain for public finance management. So this report that we're publishing today focuses on the increasingly high expectations of the different stakeholders and how oversight of the use of funds and good PFM systems are kind of a prerequisite to receiving funding and can better improve how it's used. We also talked, over the course of this project, during our discussions about the challenges of implementing systems like the ones that we're describing and how we feel that those can be overcome. So today, we're going to be discussing blockchain more specifically in a little more detail, and how that type of architecture is suited to developing the kind of systems that I'm describing. And delighted to be joined for that discussion by Mark McDonald, EY partner, who's been very involved in this project from the start. and Dr. Joachim Schwerin, Principal Economist at the European Commission. Thank you both for joining me today.
My pleasure.
Joachim, I'll come to you in a minute, but I just want to give Mark the chance to talk a little bit about the project. As I said, Mark has been involved in it right from the start and has been very helpful in kind of guiding our thinking and our research. So yeah, it'd be great to hear from you, Mark, about what you've kind of taken away from the project.
Well, and thank you, Lewis. Thank not just you, but you, Sinan, the other members of the team. It's been a great year-plus journey to explore this, and of course, we couldn't have done it without your excellent help. In fact, I think that is the point. The firm has obviously got a lot of experience and a lot of perspective on where the future of PFM, public financial management, is going and where it ought to go into the future. It's an integral part of our own business, but it is also a topic that deserves considered and considerable discussion about what that future potentially does look like. And we can't do that on our own. And in fact, so it really is through partnerships such as the one that we have enjoyed with you that makes these sorts of discussions possible. So it really is just a contribution to that discussion. Hopefully, people find it useful. And yeah, let's see how the next sort of 50 minutes go. I'm personally very interested to hear how the conversation goes. Joachim is going to be an absolute star in this, I'm quite sure. So anyway, back to you, Lewis, with a sincere thanks. Also a thanks to my colleagues, Richard and Carolyn, and the entire team. It's been a great year.
Yeah, absolutely. And as you say, it does very much feel like the report, we're very pleased with the work we've done, but it feels very much like the start of a longer conversation and a lot still to be talked about in this area. Joachim, thank you for waiting. Let's hear from you. Can you tell us a little bit about your experience with blockchain and your kind of experience of the topics that we've been setting up today?
Certainly, Louis. Thank you very much for having me here, and also thank you very much, Mark, also for your kind introductory works. And I must say it has been a great pleasure not only to prepare this discussion, but also to read the report, and actually also to read the report of last year. And I come in a second to that. But first of all, so I'm principal economist in the unit that deals with the digital transformation of industry in a part of the European Commission that is responsible basically for the real economy. And I've been in the space for quite a while. I'm now working for more than 20 years in the Commission, started with industrial and competition policy. Then I worked 10 years on access to finance for small and medium-sized enterprises. And this is where I came also very early in touch with what I would call decentralized technologies. I was working in the team that was saving all these banks from day one in the financial crisis of 2007, 2008. And we realized that 3/4 of our small and medium-sized enterprises were financed through the banking system, which at that time, and not only at that time, was exposed to heavy centralized risk, obviously. And we were looking for alternatives to improve that. And then we started a long journey that basically took off at the same moment that the Bitcoin white paper was produced, end of 2008. Which brought us to alternative finance, fintech, blockchain, crypto, and now I'm responsible for developing the token economy, basically for the real economy. We have identified blockchain very early, and I'm now speaking about, let's say, 2015 at the latest, as a very useful technology. For me, it's not a technology. For me, it's a game changer for society. It's really something that puts things where they belong, from top down to bottom up, in terms of finding a system that is both generating trustworthy, but also scalable globally at very limited cost. And that puts us directly into our topic here, because I think when I read your reports, especially also the new one, that you bring quite naturally things together that so far have not really been combined. You see endless documents on blockchain, you see endless reports on all sorts of finance. You also see a lot of discussion, obviously, from the capital market side, from institutional investors, from regulators on the space. But this is more to look for revenues, just returns, to look at business opportunities. But the question of how to thoroughly use and apply the technology in order to exploit the potential for efficiencies, the massive potential for efficiencies in everyday transactions so far has not been really focused upon to the extent that it merits to be. And there I think that the report fills a gap, which is extremely important to have. And in the discussion, I will be very happy together with Mark and you, Luis, to exploit that further and also to add of what could be the outlook on this, because this initiative perfectly well fits into a lot of things that we are now doing in Europe and certainly also in other parts of the world, and happy to explore that.
Excellent. Well, thank you very much, Joachim. Yeah, very excited to get into this conversation. Well, let's start with what you were kind of setting up there. I think it'd be interesting to hear from you. If you mentioned, the sort of top down and bottom up approach. Can you describe what you feel are the kind of the unique advantages that blockchain offers for systems administration? Yeah, and the kind of flow of information.
Yes, I think that the nice thing about blockchain as a completely decentralized technology is that it can, I would say, bring the market sides on all types of platforms much closer together and giving new meaning to the term of intermediaries and their role, if at all. I mean, I'm an economic historian, and in the past, when you look at how humanity has evolved, basically the local cooperation of people that trusted each other has been a common feature of every activity. You didn't need to like these people, but they were from your village, and basically your radius was during a lifespan perhaps 10 kilometers out of your village because you didn't travel at these times. So you had to work with the people and the resources that were there. And this is why self-organization is actually, I think, the DNA of humanity. And that got a little bit lost over the last couple of centuries, obviously, when transactions got more complex and when therefore a new function was emerging for all types of intermediaries that were coming into existence, especially in the financial markets, as we know. And this has taken, in a way, a life of its own. So now when we look at inefficiencies that we have, for example, in capital markets, to a large extent, in my opinion, these are inefficiencies created merely by the existence of these intermediaries who basically, as I said, have taken an existence on their own, who are burning parts of the money that is supposed to go to the other side of the market, very often for useful functions, very often not so much for useful functions. And we have always lacked a technology that enabled the exchange of values between people everywhere on this planet on a trustworthy basis, but also that was able to scale basically in real time and with very limited cost. And blockchain is this game-changing technology. So it allows people to align their activities in a much better way through self-organization. And of course, in the early days, people were saying that this revolution goes so far, we don't need intermediaries any longer. I don't agree to that. But there's a lot of intermediaries that have to reconsider their role in this system and to learn a lot to get much more efficient and better if they want to stay. And this is precisely what brings us to this topic here. Because I've been involved in my previous functions a lot to fund management, and I've seen a lot of PFM systems in this way, and that has always been limited by the factors that I've been mentioning. But now blockchain enables us not only to apply the technology, but basically to give a sort of identity to each product that we're having. And I give you a couple of examples later in this discussion here, and follow on that journey of this product in a completely transparent, in an immutable way, because what is on the blockchain is on the blockchain, but also in a way that is directly shared with everyone and where you can onboard a lot of requirements that you need to fulfill. And perhaps the best example that I can give you, and we are already working for 5 years on that, and we have it operational now, is a system where we detect fake products. So this is an area in the real economy where I'm basically responsible, and we're working with a lot of colleagues together on this system here. 7% of our imports into the European Union are fake products. So we are designing a system when something is produced, regardless whether it is in the world, that the moment you produce something, you create a digital twin. You ensure the information exchange between the two through NFTs on a blockchain, and you follow the journey of the physical product through the digital twin that also goes along this journey, and where you can check the integrity on an open source blockchain system. What I describe here for any type of physical product, of course, can apply in the same way to any type of financial product. And that is quite natural because blockchain emerged in a financial context with Bitcoin and the cryptocurrencies. And the functionality of these type of networks is, of course, not only in making quick gains, but especially in improving the process as such, where, for example, you can onboard the functionalities that we now have in the ESG context. So when we are looking at physical products, we now have policies in the European Union that to need to ensure, for example, when you produce something, that it's done in an environmentally safe way. It is done in a way that doesn't exploit child labor. It's in a way that also fulfills some ethical requirements that we have elsewhere. The same now applies to financial products. And this means that when you have a product launched by a fund and where you need to ensure that it fulfills requirement, that you can track the journey, that you can see who is actually the recipient, does that really get to the right location? Does it get there in the right context? Is it the full amount? Is it the right recipient? What requirements do I have? This can quite easily be programmed in this context here, followed up, be ensured, as I said, on a blockchain-based system, and lead to, in my opinion, tremendous improvements also in terms of PFM context where this has been underexploited. And this is where I see the natural evolution of this field here, where what you say in the report comes very handy for the current discussion we're having.
Yeah, that 7% seems an astonishingly high figure for the number of fakes. That's a lot. But yeah, that's a really fantastic analogy. And yeah, the idea of ensuring traceability across the whole process is really not an analogy I'd thought of with PFM to product origin certification and that sort of thing. But actually, yeah, as you say, there is a very obvious parallel there. Mark, something Joachim said early on in that was about the intermediaries, and each of them kind of absorb part of the resources themselves with their own administrative costs and so on. Can you expand on that a little bit? I know, with your career and looking at public finance systems, that's something that you've seen a lot of.
Well, I certainly have, and it's really a design issue. But the design of today's systems reflects our ability to manage. And at the moment, we have a series of kind of integrated, nested, relationship-based transfers, really, in the way that public budgets are delivered. And one of the reasons for that is because at the moment, it's very, very difficult for me to connect systems together around a common purpose. And that common purpose, and Joachim make mention of this, is that if I step back for a moment, the entire purpose of public budgeting is to take the legal authority of the state to act, to assign a budget, and to design program and delivery systems such as the allocation of that money is for a social purpose. And the objective is not the allocation and the tracking and so forth of the money, it is the execution of the social purpose. And whether that's healthcare or education or national defense, right? We know what those are. But the role that technology can start to play to overcome the existing administrative barriers in the way that authority is intended to lead to the result is really what we're talking about here. So let me give you a little bit more specific example using the analogy of the intermediaries. The originating source of the authority is the legislature. There's a central budget authority that then allocates that money. But in the modern public administrative systems that essentially everywhere in the world is experiencing, we have an increasingly decentralized nature of the way that money is ultimately expended, because I transfer it to your department, you sub-transfer that to a division in your department. It goes potentially outside of the department or the ministry to a delivery agent and so forth. And the complexity of the way that those systems reflect the decentralized nature of life is a barrier to being able to have that very simple demonstration of, I've got $1, it has a purpose, I'd love to find out whether or not that purpose has been met. And as has already been said, one of the great advances of blockchain-based shared digital ledger-based technology is that it can overcome those institutional barriers in an effective, efficient, much, much faster, much more elegant way. And that is the beginning, hopefully anyway, of a new paradigm in being able to execute the authority of public budgets, to be able to enhance transparency, to be able to enhance accountability. But as you said, Lewis, at the beginning, most importantly, to develop and to deliver a more precise and specific linkage between what the dollar is actually achieving. And if I like it, great, let's continue. If I think that there can be reallocation, allocative efficiencies to be able to deliver greater social value, then now I'm able to make those decisions in a much more timely and effective manner. And that's the beginning of a paradigm shift.
Yeah, absolutely. Just to the audience, I should have mentioned, some of you have already found it, I think, but there is a Q&A if you want to send questions that I can present to the panel. You may have to scroll down a little bit from the video to see it, but please do send in questions and I'll read them out here. We have one from Alexander Bukovsky here asking about if we see use cases for both blockchain and tokenization beyond the scope of being a medium of exchange. And I think that is kind of what we've been talking about, right? Not just exchanging tokens, but a medium of the exchange of information, I think, is part of it. And it'd be great to hear from you both on that. And one thing that maybe I was thought to add to this is that when we started the project, I think what I thought when I came to it was it didn't seem like a natural fit for blockchain, because when you think about a central budgetary authority, you think this is a centralized system, and therefore it's not particularly amenable to decentralized transfer of information or sending information. That's something that we've kind of dispensed with over the course of the project. There's no longer seems like a valid objection to me, but it'd be good to hear from you, Joachim, on your thoughts there. I think. Yeah, and that will probably go some way to answering Alexander's question as well.
Thank you, Luis. I mean, one thing that we should not mix up is that we have a decentralized technology, but it can be applied to all sorts of contexts. I mean, you have permissioned or permissionless blockchains. You have combinations of various things. Of course, you can use blockchain for limited purposes, for centralized purposes in a way, but you still have the functionality. So in my opinion, what we are seeing is the emergence of a whole spectrum of things that have very different applications and that will coexist. You have the extreme decentralized systems to the extent that decentralization is possible. And that, of course, is in a way an open process, because absolute decentralization in a way is a fiction, but you might get there. We have new forms of cooperation, like in decentralized autonomous organizations, that reflect a lot of these creative processes that we're discussing here. But you also have blockchain applications and many centralized applications for the purposes you mentioned, and especially when not only funds, but also industry is using blockchain applications simply in order to ensure, let's say, certain secrecy, although you have means, of course, to do that on blockchain in terms of IP rights and other things. They prefer closed systems compared to open systems, but it doesn't mean that the other things are not possible. So in a way, you have a sort of technical spectrum here that is very broad. Let me briefly elaborate on one thing that Mark said, because that is extremely important, and that is the utility. I mean, that is probably the bottom line of all of that. We are, in the European Commission, a public authority. We are having a lot of funds, we are having a lot of other public activities, and we only invest with resources, with people, with money in something that can really deliver benefits to the public, to every citizen, to the small and medium-sized enterprises that I mentioned. And this is, of course, also the guiding question that we are having here. How can we use the technology in order to get that additional utility? Because if we don't have that additional utility, then we wouldn't invest our resources into that. And we have made our commitment to do that massively because we see it on many different fronts. We have already discussed the efficiencies. We have already discussed that it's more about the exchange merely of data, of information, but it is a value system. It is also a system of incentivizing people to get much more involved. So, for example, when you're looking at the green transition, when you look at CO2 certificates, when you look at savings that benefit the environment, the more people feel directly involved, the more they feel that an activity is linked concretely to them, the better they are motivated and the more they will cooperate. And this is something that clearly relates to all the types of funding also in the context that Mark has mentioned. I mean, funding is everywhere, as he said, from healthcare to energy to all the other areas there. But we have this opaque system now where you have more and more parts of the system in a fractionalized way cooperating, and this leads to a reduction of transparency. So you need a technology that improves transparency, that improves the efficiency of the throughput, but also that gives a really meaningful dimension of decentralization. And just to have a sort of work stream going into one direction where you have it ever more compartmentalized doesn't mean that it is meaningful decentralization. Meaningful decentralization is that everyone who is in the chain has transparent and secure knowledge of what is going on in this immutable way, and therefore knows that they can trust the system, which is not what we're having in large parts of the fund system that we are seeing right now, unfortunately. And this is why, as part of the funding system has come into disreputation, I would say, because people, of course, realize that it can be done better, but they don't know how. And this is, I would say, an organizational issue. This is an educational issue where precisely reports as yours play a very important role in order to show what the opportunities are, but in a very concrete way. Because with all due respect, I would say it will, in the medium term, not be too complicated to already implement quite a meaningful amount of things that we are discussing here in the practical organization of such work. Because at the end of the day, what we're talking about here, blockchain, smart contracts, is just code. It is programming little things that basically give every well-defined product a sort of data sheet, an identity, tracking and tracing it, ensuring the transparency of that. And that is not rocket science in a way. The concepts are easy. The concepts are existing. Ledgers, this type of contract, the way that we program these things, this doesn't need to be reinvented, but it needs to be recombined and implemented. And that, I would say, is really what we are up to and where this discussion here is very helpful.
Yeah, absolutely. I couldn't agree more. I think, what you're saying there about I think in some ways, public fund management is already much more distributed than people think. Like it's already there's a lot of intermediaries. Like the decision making is not taking place entirely at a central authority. It's taking place in a distributed network, but they don't actually have the infrastructure to allow the information to flow nicely between these different parts. And that's kind of the change that you're talking about, right? Like creating the infrastructure to support a better decentralized way of doing things. But it's not like an organizational overhaul. It's not a reimagining of how all this works. Yeah, Mark, I imagine you've got things to say on that.
I certainly do. Yeah, and again, this is about the purpose. This is about the administrative efficiencies, the effectiveness, and so forth. It's just happens to be that the technology is powerful enough now to enable this, but we've long wanted to improve, not only just accountability for the actions that are funded through public funds, but their effectiveness. And so for decades, this has been, the intention of a more modernized and more effective PFM system everywhere in the world. The fact that we're able to now execute that through some technology and enablement is serendipitous, right? And what Joachim has just said is that, I mean, his hypothesis, and I'm not trying to put words in anybody's mouth, but his hypothesis is that in the medium term, in the relatively short term, we are going to see the advent of significant benefit accrue to us collectively, socially, if you will, as a result of the fact that this technology is taking shape. It's not an experiment for years now. It is just that it needs to take hold. It needs to take some further shape. But as it does, the benefits are going to start to accrue very, very directly. The fact that we have tried to, I would say, increase the decentralized nature of the way that systems actually operate is, I think, been by design. You've tried to take decision making, you've tried to take impact closer to the affected parties. What we have lacked is the ability then to continue to reconcile that against its legislative authority in a meaningful way. And so all we're able to do now is we're kind of almost able to close that loop. So I think you can hypothesize again that you're going to get the administrative efficiency, you're going to get the improved accountability, the improved effectiveness. That's actually an improvement to the democratic nature, the legitimacy of what, again, we have been seeking for decades and decades in the way that public systems are designed.
Yeah. I think something that I think we come to in both of the reports is that there are advantages of flexibility and proximity to the decisions being made close to the front line. There's obvious advantages there, but there are also advantages of being able to aggregate information from a large number of those and use it to inform policy at a central level. And we talked about pricing efficiency in a couple of contexts, and these are getting that high level view is only possible if you've got an architecture for information to flow from the front line to the central budgetary authority and back. And it's something that it's very clearly desirable in the current system, and we just need the architecture to deliver it. I wanted to come on to perhaps for both of you, what are some of the institutional or technical obstacles that you encounter when or that you see in industry or in governments when trying to implement this kind of system? What's kind of holding them back? What are the main obstacles, I guess?
I think, in my opinion, if I may start, there are two main obstacles, but the first one is probably the most important one, and that is awareness and education. That's especially when you talk to politicians and regulators, certainly also when you talk to the largest part of the business community. Same thing with any piece of technology, that you do not need to understand the technology fully, but you need to apply that. But you need to have some people that, of course, go all the way and understand it. And that is something which is a very recurrent issue. We see that everywhere. For example, we have now, I would say, history of at least 10 years, and that sounds short, but given that cryptocurrencies only exist for 14 years now, or nearly 15 years, that's quite a long time then, to have things like the MiCA regulation, the Market in Crypto Assets regulation, in place, but the implementation is on the national level, the standards come on the national level. That means that the amount of people that truly understand what we're discussing here has to increase significantly. And this requires then research, this requires reports, this requires education. I know that a lot of education providers are now targeting the audience, and this is very good, but there is much more to be achieved. The second thing is, of course, interoperability. I mean, we have been discussing the issue of, indeed, the fragmentalization, the decentralization of bringing that together. And we know it is needed. I will give you in a second another example, but we also need to ensure that the information comes meaningfully together. And to do that, you cannot put everything on a blockchain, because on a blockchain is the complete opposite as is, for example, some data space for artificial intelligence. A blockchain is a scarce good. It is relatively expensive. It is, of course, also from a data perspective, not completely easy. You can ensure privacy to a large extent, or perhaps fully using certain technologies. But what is out there basically eternally. So you have to be very careful what you put on a blockchain. And therefore, you need to have also other things, oracles, bridges, data spaces linked to a blockchain that can interact. That requires standards, that requires a lot of cooperation. But it's a worthwhile way to go there. And we see now, and that's perhaps something that I realized while speaking and listening to you and to Mark, perhaps in the audience, we have a few people that are still thinking that we are talking here, but where's the beef? And I want to reassure these people that we are way beyond the point that we consider blockchain as a means for speculation or a means for business that is not serious. We have been building blockchain infrastructures in Europe and elsewhere for a number of years in basically every policy field now. We are hugely investing in open source blockchain infrastructures that work together. We're having a massive increase of standardization in educational activities. We put a lot of money there now also to develop pilot projects, etc. We are far beyond the point where this is theory. This is now very much practice. But what we must understand as people in the public domain is that we have the fastest technology now that we've ever seen. As said, I'm an economic historian. I have done a lot of research in the past on innovation and how it emerged in industrial context. And I have never seen by far any technology that in its applications is moving so quickly, which means that as a regulator, you cannot take all this time that you had in the past. That was a luxury that is now disappearing, because you need to move on with the development of the technology. And to do that, you need to learn from the market. And for example, there are some players in the area that we are discussing here, be it institutional investors, be it, for example, reinsurance companies. That's a very interesting application that actually also do what we're discussing here. For a reinsurance company, think of this accident a couple of years ago in Beirut when something in the harbor exploded and caused huge damage. The information was there, but the information was not recorded in a trustworthy way. So what they are now doing, and I'm discussing with a number of them, is that they are trying to find ways to engage the local communities, to give them a sign if they see something is going wrong. It has to be checked in a specific way. It has to be recorded. And that gives them meaningful input to better design their big policies. The same applies to every public entity that is starting a fund. With the fund, you always have a matching problem. You always have a processing problem, because you have a lot of good ideas, a lot of good objectives, but normally as a fund manager, at least in the public domain, you find it very difficult to fine-tune this so that it really gets to the people, which is why you need this decentralized approach. And all these data have to be managed. All these data have to be made compatible and transparent. They have to be put on a certain sort of infrastructure. And this is where the practical problems start. With all due respect, and I'll end there with my comments on this point, but the theory of all of this is very, very simple. And indeed, you can lay it out on a couple of pages in a very good report like yours. But it is so much more difficult to overcome the detailed problems in every specific context, because the people are not there where you want to have them. They do not understand the technology. The technology, like with smart contracts, look difficult to many people. You have certain discussions on that, how to, let's say, standardize that. All of these tricky things take a certain amount of time. But in my opinion, the train is going in this direction and can hardly be stopped, because you have now this movement behind it. When you look at the largest inspiration that we have in the blockchain space is 4 billion gamers. It's the young generation in this field here, because everything we discuss about tokens, everything we discuss about value transfer, everything we talk about conflict resolution mechanisms is being dealt with in very innovative ways in this context. And there is a generation growing up now that organically moves in this space and think actually that this is normal what we're discussing here. But when you discuss it with people that have let's say the elder generation, they usually don't know what we're talking about. And therefore, we also have a generational gap here that needs to be addressed. But this is what makes me very, very confident in the long term. And I think when we talk about funds, also fund managers, that's the bottom line of that. You need to see, where are we in 10 years? Where are we in 20 years? And in 10 or 20 years, we will be precisely there what we're discussing now, because it's a natural growing process now, again, also bottom up. We need to have a little bit of patience for the transition period, but we'll get over it.
Yeah, I think, I mean, a lot in what you just said, but yeah, the younger generation point is really interesting. I think, it's a simple thing, but just growing up with the expectation of instant and mobile messaging, like it's just not, and the internet with you at all times, it's just not acceptable to have a delay when you want to know something. And if you grow up with that kind of expectation, then you're going to have a completely different set of standards that you expect for systems design in the sorts of spaces that we're talking about. Joachim managed to touch on a couple of different points there. One, the practical challenges, and then also real world implementation. And both of those, I think, are very important points that we should be touching on. Mark, anything you want to add on either or both of those?
I think a very persuasive set of arguments, to be honest with you, and I think quite reflective, at least of my own personal experience as well. I would just reiterate the one point about understanding, and just maybe put a slightly different spin on it. It's not just understanding, it's the ability to communicate it in a positive way that I think is still a bit of a challenge. And again, our hypothesis, and it's your expert help, actually, Lewis, you and the team, the real purpose of the series of papers and the conversations that we've had is really about trying to communicate, not about the technology, how do you do it, what's a smart contract look like, all that sort of stuff. Of course, that's important, but as we've just said, that's no longer, like, that's kind of table stakes now. It's no different than any other digital technology that we use every single day in our life. Instead of talking about that, what we really need to do is we need to be talking about the use value of the application of that technology. What does it allow us to overcome that we want to? What does it allow us to achieve that we want to, that we couldn't do yesterday, but we can do today, and certainly well into the future? And that really is as simple a way as saying, let's talk about the right things here, not about the details.
Mm. Yeah, I think that's a really important point. And as Joachim was saying, I feel like there is maybe a sense among policymakers, particularly in the public sector, that this is something they can treat as a nice to have, as a luxury, and when we've got time, we'll get to it. But at a certain point, when you make this about delivering social benefits and maximizing transparency and delivering on what we talked about earlier, the increasingly high expectations of transparency to stakeholders, then this stops being something that you can get round to when you've got time for it, right? This is actually something that should be an expectation.
I couldn't. Well, I mean, let me just jump in here for a second. I mean, I couldn't agree more. And again, who knows exactly why, other than the fact that it is happening. So why don't we just start from there, and I don't even have to explain why. There is an increasing expectation that if I have $1 and I want it spent in a particular way, I want to understand what I get for it. The one of the areas that, again, you highlight, and we kind of worked on in the paper, and we had a very productive conversation through one of the podcasts when we were talking with some world leading capital market experts, is in this emerging, it's well emerged, but increasingly important area of sustainable finance. And so again, just think about the simple prospect there. I want to invest in, say, a climate positive set of activities, and sometimes, very often, I want to do that through a government structure, right? Many governments around the world are very active in the capital markets around green bonds, social bonds, and so forth, right? The intention there is, from the investor's perspective, no longer just the financial return. It is also the actual climate impact. And I don't want, as an investor, to wait 10 years to hear the story and read some ex post audit report about what happened I want in much more real time to understand the way that the investment that I am helping to fund is achieving not just a financial return for me, yes, get that. It is the impact, the climate impact, the social impact that I'm actually seeking, just as importantly, if not more so. I need to have the necessary information and transaction management infrastructure to be able to achieve that. Again, it just so happens that this well-emerged technology that we know as blockchain has come into the fore and is increasingly important in the execution of that objective.
Yeah, and Joachim, please.
Yeah, sorry, but I just wanted to react to that because I think that's probably one of the best examples that we actually have. And it is independent of my preferences, of Mark's preferences, but this is simply what the market demands. And very interestingly, also from a capital market perspective, it allows two things. It allows, first of all, to raise capital with, let's say, lower interest rates or with a different return structure, because if you add layers of value on top of just the financial returns, then you have much more to play with when you are designing financial instruments and when you're looking at the design of funds. And the second thing is indeed that you again add the credibility. I mean, if I now hear that I'm buying something from the company and the company says that we offset something for the CO2 impact or whatever by doing something in some country, then I can believe that or I can't believe that. And usually I don't believe it. But what you can see through the technology is not only that you have the transparency and then you can actually see that perhaps quite soon also in a sort of metaverse type environment and where you have a combination of different factors that we're discussing, but you immediately have the feedback mechanisms from those on the ground that can verify whether that's happening or whether that's not happening. And that's actually the true potential of the blockchain. I mean, Louis, you have been asking about can decision makers, can politicians ignore that? I mean, I would argue, although I'm a big fan of space exploration, you could probably get rid of space exploration because it's not truly needed. But you cannot afford any longer to disregard the disruptive elements of blockchain technologies because you see the whole world adopting it. When you see a traditional technology, you think that our competitors, we see that from the European or North American perspective, are perhaps some countries in Asia or elsewhere. Now we are competing with the whole world and with countries that we never thought of in contexts that we've never thought of, and everyone has their positive use case. Because what you basically need is a mini platform on your smartphone or wherever, and then people will program that for you, and then it already works in a very meaningful way globally. And this brings so much more potential to everything that you ever wanted to reach with a funding program or with a public policy in this context here, because it's not only one benefit as regarding the return structure. It's not just the second benefit as regards transparency and immutability, the motivation, the incentive effects. I mean, I sometimes feel like I'm here at a sort of Tupperware party where I'm selling products because they are so nice. But this enthusiasm that we feel in the blockchain space is there because a lot of things that were so far disconnected now fall on their place and add more value the more you combine them. And this is actually the bottom line of the discussion here, which, and there I'm again fully with Mark, we just need to translate in these simple, everyday little gains that can be exploited, because once people start this journey, also in a practical context, I've never seen anyone actually, also the big critics that once started this journey, that have never been absorbed by the use cases and the functionality that it is there. You just need to start your journey somewhere and move along, and then you experience that for yourself.
We've got another question from the audience here. Just on the point about challenges, are there any difficulties in implementing the sorts of systems that you were talking about at scale? You know, if there's a pretty high throughput in finance management. Does that do you run into scalability issues when you're trying to implement blockchain for a solution like this? I don't know if either of you want to jump in on that, but yeah.
Well, I'll start and then we can see where it goes. It's a great question. It is absolutely important, and the right answer is to say, can it scale? At what level are we talking about scale? Right? Are we talking about moving and an entire public financial management system onto blockchain enablement from the central budget authority down, like a top-down sort of thing? The answer there is absolutely not. Could that scale at the moment? No. Could it scale on any other technology? The answer is absolutely no. And so it's not. So the response to that is to say, let's start with some of the important the priority transactions, the priority conditions, the applications, whether that is in, as an example, development finance, whether it is in sustainable finance, like we were just talking about. Let's start with priorities, and it will scale so that technology can scale to manage the number of transactions and all of that sort of thing. That's not an issue. And it can do so, by the way, without the misconception of heavy power usage and all of that sort of stuff. Those are the kind of the technical barriers that have been and are continuing to be resolved. Scale really is one of governance. Let's start with those things that have high priority, high value. We start to accrue multiple applications of that. To my own personal view, anyway, that is the path towards scale.
I completely agree to that. And it's certainly an issue of prioritizing. It is certainly also an issue of then exploiting step by step the improvements that are being made. I mean, if you look at the throughput of the key blockchain platforms over the last 2 or 3 years, you see immense progress in the rates of transactions, for example, per minute or whatever. You also need to be very careful what your benchmark is. I mean, I see very often comparisons in the throughput of Bitcoin or Ethereum-based transactions on the one hand side, and let's see MasterCard or Visa on the other hand side. But we're not talking about the same activity there. We're not talking about the same amount of data or economic use of that. So that's a little bit comparing apples with oranges. But also, and then that's perhaps an issue once you get in this discussion here, to have the learning effect in order to see what actually asset you put on the blockchain. So the prioritized projects, of course, they can be the first one and should be the first one, because that has the potential of scale that is probably realistic now in the short term. But also, let's not forget that what we're putting on the blockchain is not your life story, it's not your CV, it's not every detail of the product here. It's basically a sort of indicator whether something is correct or not. In Europe, it's a little bit like with the COVID passport that we had. When you cross a border, it needs to be green or red, but the guy on the border doesn't need to know who you are, what your name is, what your age is, where you come from. Just that, do you have authority to pass or do you not have authority to pass? That's the same with blockchain. What we are talking about here is the blockchain is one element among other elements that you use in the tech stack, but the blockchain fulfills the decisive function, which is ensuring the integrity of the product by saying it is green, good, or it is red, bad. And that you can already now do with a lot of transactions with quite limited size of the networks with the ability to scale.
Yeah, thank you. That's a really good point. I think maybe I'd add on this, beyond the sort of technical scalability questions, there's also just organizational challenges to scaling, to rolling this kind of thing out at scale. But one of the themes that we came back to a couple of times in this process, particularly with the podcast we did with USAID, is that we're not necessarily talking about kind of full scale. It's not like a root and branch redo of the system. You don't have to abandon the existing enterprise resource management systems. You don't have to abandon the existing skill sets and familiarities with systems to implement something on top of that can deliver additional functionality and that sort of thing. So there are probably, there is a question of prioritization. There is a question of implementing this first where it will make the biggest difference. But I thought it was worth mentioning because, throughout the process, we had people concerned about the challenges of delivering this at scale, not because of technical problems, but because of institutional inertia as much as anything. But actually, I think one of the things that we took away from this is that technically it's not as big a lift as you might think. What was the other thing I was going to mention? Oh yeah, Mark referenced another podcast we did with European Investment Bank. That's available on the website. All of those are linked. There's a page that collects the 3 podcasts we did, the third of which is being published today, which was with a director from Children in Need about grant management and that sort of thing, which they had a lot to say on that. Yeah, extremely, as you would hope, extremely rigorous requirements placed on them to ensure that the money is properly used, as you would hope in some ways. But it is a big, difficult operational challenge for them, and I think there's a lot of desire from their end to meet that challenge, using up as few of their resources as possible. And yeah, just on the sustainable finance thing, I wanted to mention, I think money really talks in this kind of thing, right? Like, and it's a very clear demonstration of the value that investors are placing on this kind of information. They are actually sacrificing returns for it. The so-called greenium, the premium that they pay, that investors pay in order to get green assets, where they get this kind of transparency, is a measurable, demonstrable phenomenon in capital markets, and it's a very immediate return on investment. If you're able to deliver that transparency, it's a very immediate return on investment there. We're running pretty short of time now. We've got a couple of minutes left. We've covered a lot of ground here, and I think it's been a very productive discussion. I'll maybe just come to you both, and if there's anything you want that we haven't touched on that you feel like is a key message you want to get across. Mark, maybe do you want to go first?
Happy to, and we have touched on it, but let's kind of turn this is current, but it's also future. But there are other dimensions of that future that personally, anyway, the working hypothesis, and I think we can start to prove this quite quickly, is what are some additional conditions that are going to see this take hold in a quantum leap sort of way. And the one that I think is one of the outsized drivers of potential here is behind your head there, Lewis, is the Digital Monetary Institute brand, and in part that's around digital currencies. And I don't want to prosecute the governance and the policy side of that, but there is no doubt that is an advent that is also very, very close to market. It is in market in a number of jurisdictions, but it itself is going to accelerate very quickly. Years, perhaps, but only, right? And as that happens, much of the public expenditure in the world will be affected by not only just the advent of digital currency, but then how can we connect it to our underlying systems? Well, the type of PFM systems that we're talking about here today, the advent of digital currency on the one hand, with the blockchain to enable its track, trace, impact measure, that's going to change the future of the world, to sound a little bit futuristic about it. But I think the evidence is increasingly there that is going to take shape.
Can I just jump in very quickly? We have another final question from the audience, and I thought it would be good to come to that. And that's, when do you expect to see blockchain implemented at any scale in PFM systems? And I think, Mark, you possibly have some concrete experience of this that you might be able to share. And Joachim as well.
I have my own experience, but it happens to be in those areas where it is particularly so. I talked about priorities earlier. There are probably two. One is going to be in the funding of PFM activity through sustainable finance. The other is in the granting type world, where the conscious objective of the allocation of the budget is for somebody else to execute it. And that is the pure definition of, I've got institutional barriers, I've got system barriers, and so on. And that can be in international development. It can be in domestic support for aid, it can be for, COVID response, it can be for business grants and so forth. I think those are the areas where it is well and truly in play.
Thank you very much. Joachim, anything from you to add to that?
Yeah, I would fully agree to what Mark said. And as you've asked for basically sort of the last comment, and Mark already gave a very pertinent one, what I would like to add, and we have also briefly touched on this, is basically the issue of confidence into public systems. We are observing everywhere on the world that citizens are more and more distrusting politicians and public entities. And I think there's a series of reasons for that. And the answer to that is not that public authorities, like unfortunately also in many parts of the world, start defining what is fake news and what is not fake news or things like that, because that is not their discretion to do so. The answer to that is also not adding more audit reports to already existing audit reports, but to really add the involvement and transparency of people to see that things have meaning, what is being done with their money. And that's what we're talking here about at the end of the day. I think we have a neutral technology there. Here, we have never talked about preferences. I respect everyone else's preferences. I have my own. The world is big enough to accommodate for all types of preferences, but people want to be taken seriously with their belief systems. And this is something where really the element of control that you can quite easily, without indeed changing all the systems that are in place there, but just adding certain things on top, you can very easily add a few elements that can add a tremendous lot of more credibility to you, which I think is the most healthy thing that you can do. And the last thing that we want to do is start a revolution that wipes away everything that we have now done in PFM systems or elsewhere in the past. But I think we have demonstrated, for example, with our anti-counterfeiting infrastructure and also with other elements, that within 5 years in the public domain, you can already achieve a lot of things if you're only serious. And you have to make a commitment to that. You have to invest, especially the intellectual resources to that. And that's why, again, welcome your reports and also the webinars and discussions that you're having. And then 5 years is, for me, a very realistic time frame where you can already see a lot of meaningful results if you only want that.
Yeah, absolutely. Thanks very much, both of you. I think just a great note to leave on. This is it's a very powerful technology. It is already happening. It is in use in specific cases, and I think we're just going to see, as we've discussed, there's a lot of marketplace and political incentives for this to continue to spread, and it does take work, but not as much as people think, actually. And some incredible benefits to be realized. We'll have to leave it there. It's been a fascinating discussion. It's been a fascinating project. The report download link, I believe, is in the chat. You can see the other content we've produced on this in the website. The earlier report, summaries of the roundtables and the podcasts are available as well. Much more to come in this space. It's been a pleasure working with Mark and EY on it. It's been a pleasure talking to you today, Joachim, and thank you everyone for listening. We'll leave it there. Goodbye. Thanks a lot.
Thank you very much. Goodbye.
Thank you. Bye.